Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in, and I hope everyone's got fun plans for the holiday coming up here. So today's agenda, we'll go through the market update. Not too much to talk about with earnings, so that'll be quick. And then Joe's going to go, I think he's going through the sectors, the charts of the sectors. So that's our plan for today. So let's get started. All right, so you can see, we're basically, we got NASDAQ in 7 now, SPX 7. Russell did pop into state 5 there. You can see a lot of the green here overall. We only have one sector lagging. I know Joe's going to dive into this, but just kind of want to call out the consumer discretionary. That's, I think a big chunk of that is Amazon. It's like Starbucks and, disposable income type thing. So that's the only one still an 8 here. Let's see. Overall, market pulse, you can see we're pretty much flat from last week. We haven't been getting good transitions to 5 through this move, which I guess speaks to how well the move's done. So we'll look at state percentages here. You can see 8 has come all the way down, almost even with state 1s here. So obviously big move, from the top here. You can see there October 12th, we're at 35, 356 on the SPY. So now we're at almost 400. So obviously big move down. We'll look at the charts. We're pretty much very similar to where we were last week, talking about, kind of butting up against the big resistance zone. So let's take a look at just the 7s and the 5s. Let me pull out the 8s and the 1s there. Okay, so you can see the 7s here popped up, and just like this last run up, we had a good follow through on from 7s to 5s. So we had the same thing so far. The 7s have pretty much kind of peaked here in the 30s, and the 5s are all the way up to 20. Last time 5s got up to 26 and the 8s got up to 45. So what to see. I don't think much is going to happen in the next few days. We do have Fed minutes today at 3, but probably most traders will be checked out at that point. And I think half day Friday. So really, it's just, how things start going in December. So, overall, the new lows, new highs, pretty much flatlined. We got dwell times, same thing. Until we break that big bearish trend, I just kind of think that this would be kind of the norm. We have dwell times, mostly around earnings for the most part. These bottoms have come, right around the beginning of earnings. So, if earnings is driving things higher, where the Fed's trying to push things lower, that's kind of how things are going. But pretty much flat line here, nothing going on. And I didn't go through this analysis yet. So let's look at bullish, bearish. So, we're up around 72, pretty much flatline from last week. The previous side was up around 80. We don't have an overbought. Our overbought's based off of state 1s getting up around 45. So we don't have an overbought, just based off of, green pie overall. So not technically overbought, kind of in the middle right here. So kind of flatline. We'll have to see where things go. It'd be tough to, for things to push a lot higher here without some kind of news coming. But we'll go through the charts. So SPX. So this one's still in state 7, well over the average time. It's pretty much done its job, met target two. We went through these percentages, about 30%, it'll go bearish from here. And that's based off of 2007, since 2007. So, really, you look at this 4066, and, that's the target three. So that'd be your important range, getting higher than that. Down to the low side, it's going to be that 3,800. And I'll just pull it up on the chart. It's a lot easier here to annotate. So you can see here's the 200-day MA, and that value right now is 40.62. So pretty much aligns up, with that target three. Bigger picture wise, let's just pull it out a little, make it easier to annotate the line here. So, coming down here, pretty much right above that kind of level. I'd just call it 4,100 still, right around that area. So that's the big year-long downtrend, the top end of that. And we have been, making, new lows, new lows, new lows, new lows, new lows here. So, this is obviously very critical, this level up here, and we're pretty close to it. So, that's really what you want to keep your eyes on. I don't expect much action the rest of this week. Just, it's typically pretty dead trade wise. But we are, pretty much in the middle of the range that we have, and it's not giving me the numbers I want. There we go. All right, so, the current range that we have. So you can see here, there's your 4,200, and then, to downside, we got 3,800. So this level down here. So that's where we're kind of, smack dab in the middle of. We've had problems staying below that 3,800. But, I think really what you want to be watching is right up here, this 41, our trend line, our 200-day, last couple times, it's been a top. So that's really what you want to be on the lookout for as far as SPX. Let's take a look at the Russell. This was just kind of pull this up. This was an interesting transition to 5 to 7. It's normally going higher. We had like a check back here, and then it went into 5, which I just found a bit unusual. Typically, it's like this, 7 and then a 5. The momentum continues, but kind of check back and then went into 5. So just found that a little interesting. But let's go up to the top here. So, what our big level here is 1,900. You can see, we had here, we had 2 days. Basically, we touched right above it. This was 1901, turned right around, end up lower, retest again as 1905, turned right around, and then back down. So key level, huge level, 1,900, and we'll pull it up on the charts here. And then, the bottom of that range is 1,700. So, we're at the top end of it now. It's not really on this chart, but state modeling wise, we typically kind of go like this. So, started a little lower. We'll have to see if we can get up into these levels. But, your first levels, like 1880, and then, your support would be, 1845 area, holding that, but really all eyes should be on 19, and then, for SPX at 4,100, just to make it nice and easy. So pull up the charts on here, just kind of call out the 19, you can see, and then, the 17 here. So It's going to annotate. So this was really good support. Once it broke down, turned into resistance here. Had the false breakout. And this also had that false breakout. Back in. I'll show you, but turn in resistance here, and then now we're back up here again. But it has had a lot of problems, staying below the 1700. So, and this one, I wouldn't really call it making new lows. Pretty much, double bottom-ish. So really, the Russell we like to see, kind of leading, but this was that false breakout here back in November, and things that was pretty much top of the market for, Russell and stuff, because it was in that long channel that we talked about for a really long time. Popped out, false breakout, pretty much did the same thing here, false breakout, then fell down. So really 1900, watching that, I think is the key thing to be keeping your eyes on. I think we're 1855 now and 4,000 here. So, all right, some economic type news. Let's go through. I was pulling up rent inflation. This is pretty interesting. Just like the step off. If you go further out, you can see back here like 2021, this thing really just took off. This is a key driver for like that PCE and things like that. So obviously hasn't topped October reading here, 6.9, hard to see, but it's just been stepping up. So this is a big key driver for that core inflation type thing. So that hasn't turned around yet. There's also a lot of good things in here. I mean, just like food, topped out around 11.4 so far, dipped down to 10.9 here. So, just kind of keep your eyes on the main drivers of all the different inflation gauges. So obviously the battle is not won. CPI core, we're at 6.3 where the target's 2. Just pull up like a 5-year. So really, kicked off here. 2021 timeframe just really jacked up, but staying below their target here. So, talking about Fed, I meant to pull up the countdown. So next meeting, 14th December. So you can see last week, where it's about 85 for a 50-point hike, and kind of moved a little bit towards the 75. So still 3/4. Anytime it's over 80 going into a meeting, it's pretty much a lock, that they're going to do it. So we still got time on that. Looks like it's a guess between 50 and 75. So we'll keep our eye on that. The balance sheet, obviously, we talked about last week. They actually increased assets, and then they had pretty much one of the biggest drops. This week, the week that we're showing here, the 16th. So, last meeting, they went up, so they made up for it here. You can see over 1-year period, we're actually below where we were a year ago. So they're moving, pretty decent drop off. Starting to drop off, obviously nowhere near our 15% that we were at before, but basically in the 3 to 4% range now. So they're moving slower than everyone thought, but it is moving. So one thing I did pull up last week, and these inversions are getting worse. So I think we pulled up, let me pull up, it's from a long time ago, the 210. So we pulled this up, when was that? August, beginning August. the inversion was, 37. So we're way past that now. 0.76, let's call it. So we're pretty much double where we were here inversion wise on the 2 and 10, which a lot of people look at, which is well below, before when, this chart that I found. So whole thing's inverted. Currently the rate is 373, which is below our current target rate, which, same thing was last week. I find it hard to believe that, an overnight lending rate is, yielding more than a 10-year. So interesting, very inverted. So I don't think that's good news overall economy wise. These things take a while to ripple through the economy, but honestly, it's not a good sign, that it's this inverted. The overnight is, higher than a 10-year is pretty crazy, almost higher than the 30-year. So I think, let me pull up NDX here. I know we talk a lot about that. Where is it? There. Just going to pull up the chart, going to show you where we're at. We've been battling back and forth on that 200 MA line. So obviously higher here. I think if we can show that this turns into, basically becomes support again, and, it's not battling, I think that'll be a bullish sign overall. But, we'll have to see. I think really the key things to watch, kind of like a broken records, that S&P at 4,100, and then the Russell getting over that 19, and holding, obviously. So I think that's a quick rundown on the market. I'll open it up to questions and comments. Feel free to unmute yourself and fire away.
I'm back today.
Yeah, I saw that. Glad to
Yeah.
see you.
Yeah, no classes today. I've got 2 more weeks, but we don't have classes today. I don't have any specific comments, but I just wanted to say hello. And,
Yeah.
and I do keep up with the recordings.
Mhm.
But, I think we're in a bear market rally right now. I mean, as you pointed out, the yield curve is inverted. The Fed's raising rates. The Fed's reducing their balance sheet. I think we're going up for a short time, but I don't think I think it rolls over.
Yeah. Well, we are running into, like, seasonally, December is usually pretty good, with like the Santa rally, and December is usually pretty good, so, that's kind of working, in the market's favor. But, I've seen a lot, just about like Amazon's like actually cutting workforce. And, normally they have like seasonal hires, like a big amount. So kind of, I'm not sure if that's the canary in a coal mine, or, if it's just a one-off type thing.
Yeah, I've seen some statistic where November seasonally is just a really good month, and so is parts of December. So I think it's just the seasonality of it is sending us upward. But I mean, the macroeconomic things, what the Fed is doing and all that, are really against a rising market. So I don't see that continuing. It would be interesting. Is there any way in the Delphian system to do seasonality by week? I find by month in a lot of places, but not by week.
No, it's just annual seasonality.
Yeah. But anyway, that's my comment. I think it's just a bear market seasonal rally, and it'll roll over.
Yeah, well, it's definitely been a very difficult market. I mean, throughout the year, just, this thing going, where is it? And this is year to date. And you got rundowns and then you have these big rallies. I mean, this rally here, August, March was, so you get these rallies, but, the downtrend's still intact, which is hard to, it's just, it's difficult. I mean, like the studies and the earnings have done really well just because most of these runs, the studies, those daily trades, they give you enough time, a couple months out where, you're getting these rallies and, closing out a bunch of trades, even, if you enter here, you still got time and, runs up, time's on your side as long as you get those rallies. But um, yeah, the earnings have done. I mean, the first quarter wasn't that good, but it was okay. But the last two have been like phenomenal. Just, this one stepped off right when we put out the plan, basically ripped higher. This one's similar, kind of started here, so kind of a little down and then up. But yeah, so I mean, we're kind of in a dwell time. We got like a month or so until we put out the next earnings plan. So, I think it's going to be a lot of data driven, and the Fed. I've never seen so many like Fed people talking. I mean, it's just like there's like four out there every day almost. It's just this crazy how much they're talking and messaging and things like that. So
Well, they should be going into a quiet period here pretty soon. When exactly is the next Fed meeting? I can't remember myself.
the 14th, I think it's here 14th, December 14th. So couple
So
three
they go
weeks.
into a quiet period the week before, I believe, or something.
Yeah, yeah. But they're out there. Fed minutes come at 3. See what comes out of those. I'm usually not a big market mover, but um, um I had another found a chart of the week. Last week I showed you guys that real estate one. I think it's this one. Yeah, basically real estate prices versus interest rates and where we were currently. So this one is the cap rate. So basically real estate investing, like what your expected return is. And I pulled this from Reventure Consulting. This is one of the guys I follow. So basically, you can see the 6-month government treasury is yielding more than, what you get out of real estate currently, for like investors doing rentals and stuff like that. So, risk reward, I think the thesis is that a lot of people will be trying to get out or, not going into real estate, at this point, with the rates, the returns on real estate, basically below what you can get short-term treasuries. So, which, people consider a risk-free asset. So I thought it was interesting. We had a couple of, these are just uh, charts. People throw these up. I don't put too much credence in them, but they're always kind of interesting. This basically 2008, 2009, and people show you where they kind of line them up and see if they look similar. So this was the 08 comparison to today. Just thought it was interesting. And then you had another one from 73, same type of thing. It's like, okay, you're here, kind of this range before both of them are right before the big, fall off. So we'll see if that happens. But really,
What was MFHOZ on that one?
hmm?
MFHOZ.
Oh, I don't know. I pulled these from Twitter. I follow some people on Twitter and they put out these charts, but I don't know what that means. Yeah. So thought it was interesting. Always just kind of put them out there. Okay, so that's that. That's that. All right, I think that was it on the charts. Yeah, thanks, Sadir. Anyone else got questions or comments? No. I saw another one on Twitter. I didn't save it, but it was basically VIX was on the VIX really hadn't been acting normally. I don't think it's up on the top there, but basically it's on like a long-term like trend line. It was kind of on the bottom of I don't know if I can pull it up and make it look good, but basically it's like a long-term kind of, it's testing the bottom of that long-term trend. And I think I should have saved it, but whoop, sorry, wrong one. Kind of like this type thing. But before, we had this and it broke through because we were looking at that long-term trend line. So this is a new one, but yeah. So I mean, the big thing for me is will it get above these levels, and how long is this 10-year going to be below the Fed funds rate? That's just kind of blows my mind that it's like that. But so watch those key levels, and I think that's about it. Earnings wise, kind of grinding down. Few open trades, only a couple trades left. The bullish runners, we had one close out. We're close here on lows. We got a couple here that are down. This one knock looks like it's going to be a loser. Had a fairly big drop, but overall still doing really well. So none of these have been losers, and I think everyone's hit their target. Yeah, 25. So 25-0, with 3 open ones right now. So obviously a banner. Bullish runners quarters, very similar to the bullish pre-runners. I think that last one closed out. They don't have all this data, for the next earnings. So, but these ones are done. So with that, the one loser. So, only, I think there was 1 or 2 that didn't, there's 2 that didn't hit their profit target, but we're still gainers, and then 1 loser. So, there were a few bearish runners. So, if the market turns, these could be good, but so far no good. They're down right now. So, within range, but if the market turns down, these could be profitable, but right now they're down some money on these. So the bullish strategies did really well, and the non-movers. So okay, any questions on that, on the earnings? All right, well, let Joe take over here, go through some of the ETFs.
Hey, Josh.
Yep. Hey, Joe.
Hi, everybody. Let's see. There we go. And welcome back, Sadir. Good to have you on again.
Thank you.
Sure. Retracement-wise, big picture, we talked about this over the last couple of weeks. Josh keeps talking about that 1900 level in the Russell. That is just shy of the 3/8 retracement, which would be about 1950. Obviously, we haven't gotten there. That would be a 3/8 retracement of the whole top to bottom move. SPX, we have gotten to that 3/8 retracement at 4,000. We're hanging out about there now. It's another 150 points to 50%. up around 41.50, 41.60 to the upside. And then the NASDAQ is nowhere near even a 3/8 retracement. It has been, the softest index basically all year long, and so not a surprise that it is lagging behind to the upside. The retracements, as Josh said, I thought it might be worthwhile just going through the indexes that, or not the indexes, but the ETFs that we track. We track 11 of them, through state modeling. 2 of them are in state 1, no surprise, that's energy, but also healthcare. Then we've got 4 in state 7 and 4 in state 5. And then as Josh pointed out, consumer discretionary is in state 8. That's the only one in state 8. And as he pointed out also, about almost 25% of that ETF is Amazon. So let me, here are, and so what I wanted to go back and do is see maybe what bottomed out first. I mean, if we talk about market bottoms, over the last 4 months, it started in, mid-June, and then we had a retest and some newer lows, in the mid-July period. So it's really like June 16th, July 14th, the market rolled out, rallied for almost 4 weeks there through the July-August period, then into the end of the third quarter, significant lows September 30th, and then really the retest for many indexes and individual stocks were October 13th. So we were June 16th, July 14th, September 30th, and October 13th. I wanted to go back and look at the 11 charts and, just say, who bottomed first? Were there anybody, kind of lead the charge to the downside? And of the 11, it really seems to me that it was, the consumer staples, the consumer discretionary, and healthcare that really bottomed first in that June 16th period. They all kind of retested those lows in October 13th. But I just wanted to go through those charts a little bit here. We've got the consumer discretionary, right here. And, it's been in state 8 for quite a while. And that's something, along with Amazon, that I think is worth keeping an eye on. Okay, we've had 19 state 8 occurrences in the last 15 years. And, the average time period is 25. We're out to 45 now. So well beyond the average time. We've exceeded state 3. I think, this is something you really got to keep your eye on, just to see whether now, we could maintain, we could go 8-7, 8-7 and stay in that death march. But, I want to keep my eye on this thing just to see whether there is, any hope of this thing starting to turn and head to the upside. Josh mentioned Amazon, so it is 24% of that ETF. So here we are. Really it mirrors the ETF 48 days with an average of 20, 21 occurrences. T3 met and exceeded. So there too that, basically I want to watch pretty closely. The consumer discretionaries and Amazon, almost one and the same to a point, but just, see what happens there. In terms of the overall market, I'm more of the opinion that, I think the lows are in. I mean, when we go back to the extremes of state modeling, where NDX, was so extreme, we get into single digits with regards to the number of bullish states. I think basically we're going to range trade, for some time here. I'd really be surprised if we go back and test the lows of whatever June, September period. That would really surprise me. So also along the lines of discretionary, here is the consumer staples, and this is basically Procter and Gamble, Coke, Pepsi, Walmart. Each of them is somewhere between 10 and 17% of the index. I just pulled up the longer term chart. I mean, it's rallied quite a bit, off these lows. And, we've got the two bullish states, 7 and 5. So that's another one. Again, because they kind of bottomed out first, I basically am paying a little more attention to the consumer discretionaries. And then lastly, the healthcare. They kind of bottomed here in the June period. Obviously not as volatile. They've had an awful good rally, off of the lows, but it was those and is now in state one. And actually, I think this one averages 40 some odd days, in state. 40 days is the average period of time in state one. And, we're only 4 days in. So, we're talking about the seasonality. Certainly, Sudhir mentioned November's very positive. December, tends to be the same way into the holidays. So because they bottomed first, I'm really paying attention to those three to see if they give us, any hints for future direction. The others that I thought I'd just bring everybody's attention, here's energy. No surprise, it's been in state one, for some time. But, what's shocking to me is, this thing has rallied 40% off of its low, which it basically had that low in end of September. So, they continue. Just the fact that they've rallied so far so fast makes me wonder whether, maybe the energy stocks will roll over a little bit. We go out. Let me see. Here's the oil index, which has, rolled over, into state 4. I keep an eye on that, the USO, and that's basically just a futures market on oil there. Certainly, if that continues to head south, that's not going to be a bad thing for the overall market. Here's energy. Materials also have had a hell of a good run. For the most part, out of the 11 indexes, the consumer discretionary is the one that has acted, the softest, just rallying 10%. Oil, as I say, since the late September lows, it's rallied 40%. And then the material stocks here, and this, the largest piece in this ETF is a gas stock, and that's, I guess, part of the reason why this thing has done so well. This is the second best performer out of the lows, up 24%. All the rest of them are basically between, well, with the exception of the consumer discretionaries, which are up 10%. They're all up basically between 16 and 21%. Pretty good rallies. XLF, I always like to look at just because, the financials, are always so important. I happened to look up JP Morgan stock today, and I think we said this a couple of weeks ago. It's clearly, the index is getting a fair amount of movement, but some of these individual stocks are having a hell of a run. I didn't pull up JP Morgan stock here, but I think that stock's up 40% off its lows, which were, right after earnings. So, and I think that was late September. So, one heck of a move there. But XLF, pretty good rally coming up against a little bit of, double top resistance here. But again, something else I try to keep an eye on. And really, that's kind of it. The rest of them, not a whole lot that I get out of. But really, just want to keep an eye on the consumer discretionaries, consumer staples, and healthcare because they bottom first to see if they continue to try to forge movement to the upside, and keep an eye on oil, and I think the XLE is worth doing too. So I'm in the camp. We're in a trading range, and maybe with higher lows over the next month or so. So, and then just with regards to the earnings, it's always hard to pinpoint, who's got what earnings, but for the most part, the earnings have been consistent with historical findings, low 70%, basically exceed, the earnings expectations that the street always walks down. Something I read from FactSet said that fourth quarter earnings have been revised down a couple percent in the month of October. But really, to me, the earnings changes at this point are incremental. I guess the question is going to be, if we go into a recession, our earnings, in the first and second quarter of next year, going to be hit somewhat significantly, which to me would be the driving force. It's what we need if the market's going to roll over and test the lows of June and September. So that's my take on things. Happy to talk to anybody. If anybody's got any comments. If not, Josh, turn it back to you, and I wish everybody a happy Thanksgiving.
Yeah, okay. Thanks, Joe. I think it's good analysis there, and we'll close it up for the day. Yeah, we'll meet again next week, and hope everyone has a good holiday. So thank you for tuning in.
Thanks.
Hi,
Good
everybody.
meeting you.